Hi everyone, welcome back to my channel once again. In the previous video, we finished our series on technical analysis, and I promised you that whatever we have learned so far, we are going to apply in live market, making live trades. But since I trade in Forex market most of the time, I thought I should make a video for those who are not exposed to Forex market. So Forex stands for foreign exchange. So in simple terms, in the Forex market, you trade one currency for some other currency. So for example, if I have INR and I want to buy USD, so I'll give away 75, 76 INR in exchange of 1 USD. So in the Forex market, the trader consists of banks, businessmen, governments, investor, and retail traders like me and you who speculate on currency. Let's discuss on trading hours. So the beauty of Forex market is that it is open 24 hours a day from Monday to Friday. So it is very convenient for working professional like me to manage my trades along with my full-time job. So let's discuss the most important world trading centers. So it is located in London, UK, New York, US, Tokyo, Japan, Zurich, Switzerland, Frankfurt, Germany, Hong Kong, Singapore, Paris, France, and Sydney, Australia. So because the trading centers are located across the globe, that's how Forex market runs round the clock. But one important point to understand is what are the trading hours where you may find the market to be liquid, or trading hours where you may find highest level of activity from market participant in terms of buying and selling currencies. So that is when the London market and New York market overlaps each other. So these timings are on the basis of Greenwich Mean Time. So for example, UAE is 4 hours ahead of GMT. So from 4 o'clock to 7 o'clock, you may find the market to be most liquid. So if you're based in India, then India is 5 hours 30 minutes ahead of GMT. So from 5:30 p.m. to 8:30 p.m. you may find the market to be most active, and these are the trading hours where you will find most of the trading opportunities. So we know what is Forex and what is Forex market. One interesting point to note over here is that the Forex market is the most liquid market in terms of daily trading average volume, which is over 5 trillion. And when it compares to any stock exchange or commodity exchange, it is significantly higher. Okay, let's get back to what is Forex trading. So Forex trading is the speculation on the price of one currency against another. So for example, if you think the euro is going to rise against the US dollar, you can buy the euro USD currency pair low and then hopefully sell it at a higher price to make a profit. So similar to in stock market where you buy a stock at $100, and when it price increases to 105, you sell the stock making a profit of $5 multiplied by number of shares. Okay, let's understand this euro USD symbol better. So when I say 1 euro is equal to 1.07 United States dollar, it means that this is the exchange rate. So an exchange rate is the value of one currency expressed in terms of another. For example, if euro USD is 1.07 dollar, it means that 1 euro is worth 1.07 dollar. One important terminology to note is that this first currency is called the base currency and the other currency is called the pricing currency. Okay, one important terminology to note in Forex market is the PEP, which is the smallest increment of price movement a currency can make, also called point or points. For example, 1 pip for Euro USD is equal to 0.0001. So at 4 decimal. Now, let's say if Euro USD rate was 1.1050 and it increased to 1.1051, it means the price has increased by 1 pip. Okay, let's switch to the next topic, that is leverage. Leverage is very, very important in Forex. Let's understand what is leverage. Leverage is the ability to gear your account into position greater than your total account margin. For instance, if a trader has $100 of margin in his account and he opens a $100,000 position, he leverages his account by 100 times, or 100 is to 1. And if he opens a 200,000 position with $100 of margin in his account, he leverages the leverage is 200 times, or 200 is to 1. Now my broker gives me a margin of 1 is to 400. It means that if I have $1 in my account, I can buy currency worth $400. If I have $100 in my account, I can buy currency worth 40,000. Let's understand bid and ask price. I'll just show you my trading terminal. Like I told you, I used MetaTrader for buying and selling currencies. So as you can see over here, you have all the symbols listed, and then you have bid and ask. So bid and ask price is from the perspective of the dealer. So when you buy a currency, you buy from the dealer, and when you sell the currency, you sell to a dealer. So when you want to buy, you have to look at the price at which the dealer is selling, which is the ask price. So if I have to buy, I have to buy at 0.96186, and if I have to sell, then I have to look at the price at which the dealer is interested in buying, which is 0.96169. So if I have to buy, I will look at the ask price, and if I have to sell, I will look at the bid price. So bid and ask price, let's go through this slide. So bid is the price at which the market or your broker will buy a specific currency pair from you. Thus, at a bid price, a trader can sell the base currency to their broker. Ask price. So broker is basically the dealer. So the ask price is the price at which the market or your broker will sell a specific currency pair to you. Thus, at a ask price, you can buy the base currency from your broker. So this is the bid price, and this is the ask price. So when you sell, you look at the bid price, and when you buy, you look at the ask price, as I explained earlier. Okay. And whatever the difference between the bid and ask is called the spread, and this spread is the profit that your broker or your dealer makes when you trade. Now let's understand the type of trade. There are two types of trade, which is buying and selling. So when we go long, it means we are buying the market and we want the market to rise so that we can sell back our position at a higher price than what we bought for. This means we are buying the first currency in the pair and selling the second. So if we buy the Euro USD, the Euro strengthen related to US dollar, we will make money. Okay. I think we have discussed this before, that how we make money in a long position. Let's understand the short position. When we go short, it means we are selling the market and we want the market to fall so that we can buy back our position at a lower price than we sold. This means we are selling the first currency in the pair and buying the second currency. So if we sell GBP USD and the British pound weakens relative to the US dollar, we will be in a profitable trade. Okay, let's say you sold GBP, and I'm taking a random currency exchange figure just to make you understand better. So let's say the GBP USD rate is $2. It means 1 GBP is equal to $2. Now let's say if I feel that the price of GBP will fall, or the GBP currency will weaken, what I will do is I will sell at $2, and when the price will fall to $1, I will buy. So essentially what I did is I bought the GBP at $1 and sold at $2. But what I'm doing is first I'm selling, and then when the price are going down, I am buying it. Okay, now let's revise whatever we have discussed so far. I will use my trading platform, which is MetaTrader. In one of my video, I showed you how to download MetaTrader. If you haven't watched that video, go and watch. So let's say if I am interested in buying GBP to USD, the first thing that I see is GBP USD symbol. Okay, so you have the whole list of the currency that you can buy and sell. The second field is volume. So volume is the number of lots. So one lot is equals to 100,000 currency. So if I'm buying one lot, it means I am buying 100,000 or 1 lakh GBP, which is Great Britain pound. If I am buying 1.1 or 0.1 lot, it means I am buying 10,000 GBP. Okay, what? How about if you want to buy 0.0001? Okay, so you can do a simple calculation. So one lot equals to 100,000. If you're buying 0.001, it means you're buying 100 pounds, and the minimum that you can buy is 10 pound now, and maximum depends on how much money you have. So the price over here is the bid price, and the price over here is the ask price. Now, how to calculate your profit? Now, because of the leverage that we discussed, even a movement of 0.001, which is 10 pips in the market, makes a huge difference. I'll just show you using one example. Okay, so trading view again. I mostly watch my charts using trading view, and then I perform my trades using the MetaTrader platform. Okay, so I have a chart of GBP USD in front of me. Let's say the prices are falling from this level. So let's say if you take a sell position from here and again buy at this level, which is this level. Now, in order to calculate what could be your profit, what you can do is you can go to this ruler. So somewhere over here, down to somewhere over here. Okay, so this is how many pips? This is the pips. So 89.3 pips, and in percentage term, the currency fell by around 0.71%. Okay, so if I take a sell position over here and then again I buy back at this position, 89.3 is the pips that I can make. So 89.3 pips is, so we know that pips is at 4 decimal places. So 89.3 means point 0089. So this is the 89 pips that you could have make in this trade. Now to calculate your profit, so 89 pips multiply by, let's say if you have traded in one lot, so 89 multiply by, so $890 is your profit in this case. Okay, let's talk about leverage now. So you sold how many GBP? That is 100,000 or 1 lakh. And what is the exchange rate? So 1 GBP is equals to 1.25789. So multiply by 1.25789. Okay, so this is the dollar that you would need to buy one lot of GBP. However, because we know that in Forex we get leverage. So let's say if we get a leverage of 1 is to 400, then $314 is what you needed to invest to buy one lot of GBP USD. So just think about the profit. So how much profit you made? So you made a profit of 0.0089 multiplied by 1 lakh, that is 890, and how much money you have invested, that is 314. So basically that is around that is 300% return, right? So this is the beauty of trading in forex, that is leverage. But always remember there's a risk as well. If the trade doesn't go in your direction, and if it goes in other direction, then you may lose all your money or your capital as well. So I hope with this example, everything is clear in terms of the bid and ask price, the value of lot, and the pips. Okay, that's it on the video. I think we have covered all the basics of forex trading. Now, as we'll start practicing in the live market, I think we are going to use all of the terminology that we discussed so far, and is going to be helpful in understanding the trades better. So again, I hope you had a great learning session. See you next time. Thank you.